It's now been 3 years since the release of ChatGPT kicked off an investment frenzy in generative AI. Not wanting to fall behind, big tech companies have invested billions of dollars to create their own generative AI models. In addition to the tech giants, hundreds of new AI startups have popped up, collectively raising tens of billions of dollars from venture capitalists. The biggest beneficiary has been Nvidia, which makes the GPUs needed to train and run AI models. With the market capitalization of $3.6 trillion, Nvidia is now the single most valuable company in the world. For this investment surge to be sustainable, AI products need to be widely adopted by end consumers. Thus far, this has failed to happen. To date, AI has not created a revolutionary impact in the day-to-day life of the average person. Substantially all AI startups are losing money and rely on venture capital to survive. In this video, we'll revisit the AI economy and try to figure out how much longer the current investment boom can last. When researching for videos like this one, I use Ground News, which is also why I'm partnering with them. Ground News is a website and app on a mission to make reading the news easier, more transparent, and more data-driven. Every day, they pull in thousands of articles from around the world and organize them by story, complete with visual breakdowns on political bias, reliability, and ownership, all backed by ratings from 3 independent news monitoring organizations. While browsing for information about Nvidia, I found this story about the DOJ's escalating antitrust probe of the chip maker. Ground News found over 86 articles covering this story. They categorize each publication for their political bias. In this case, it's pretty even, with about 1/3 of the publications covering this article leaning to the left, 1/3 centrist, and 1/3 leaning right. You can also see factuality and ownership ratings for each publication. The left-leaning articles emphasize how Nvidia may be abusing its dominant market position. On the other hand, the right-wing articles portray the antitrust probe as a case of government overreach. One of their best features is the blind spot feed. It curates important stories that get little to no attention from one side of the political spectrum. It's a great way to broaden our perspectives, and has been great at helping me uncover stories I normally wouldn't have seen. So if you want to outsmart deceptive algorithms and see the bigger picture, Ground News is a tool for you. And for Black Friday, I'm excited to offer my viewers 50% off a Ground News Vantage subscription, which is the same plan I use to access all of their amazing features. It's their biggest sale of the year, so go to groundnews.com/WSM, scan the QR code, or click the link in the description to subscribe for less than $5 per month. And now back to the video. Since the release of ChatGPT, Nvidia has seen its revenue skyrocket. In the calendar year of 2022, the GPU maker generated approximately $27 billion of revenue. In the trailing 12-month period, this has surged to $113 billion. Substantially all of this increase can be attributed to data center customers buying Nvidia's GPUs for AI purposes. Approximately half of Nvidia's sales are made to cloud service providers. The big 3 cloud service providers are Microsoft, Amazon, and Google. They are not necessarily end customers. Instead, they host data centers, which provide computing services to third parties. For example, OpenAI does not host its own data centers. Instead, it pays Microsoft for access to its cloud computing services. ChatGPT is trained and run on Microsoft's servers. Since the release of ChatGPT, the big 3 cloud service providers have invested heavily in GPUs and other data center infrastructure to fulfill the expected demand from AI workloads. Prior to the release of ChatGPT, the 3 companies spent approximately $30 billion on capital expenditures each quarter. By the third quarter of 2024, this is almost doubled to $55 billion. A large portion of this spending has gone to Nvidia, explaining the chipmaker's meteoric revenue growth. So are the cloud service providers making an acceptable return on this investment? At least in the short term, it looks like they are. All 3 companies have seen strong revenue growth in their cloud computing segments. In the most recent quarter, Amazon Web Services revenue grew 19% versus the prior year, Microsoft's cloud segment grew 23%, and Google Cloud grew 35%. It's important to note that all 3 companies were growing strongly even before the recent AI boom. So it's hard to pinpoint exactly how much of their current revenue growth can be directly attributed to AI. While we don't know exactly what percentage of the cloud service provider's revenue is related to AI, the number is certainly very significant. Over the past couple years, AI startups have raised tens of billions of dollars from venture capitalists. One of the biggest expenses for AI startups is cloud computing costs to train their massive AI models. According to PitchBook, in 2022, 26% of all venture capital funding in the United States went to AI startups. By 2024, this had increased to 41%. As the AI fervor has gripped Silicon Valley, it is now very difficult for non-AI startups to raise capital. Venture capitalists are pretty much only interested in AI. The single largest AI startup is OpenAI, the maker of ChatGPT. OpenAI has incurred operating losses since inception and has relied on venture capital to sustain itself. To date, they have raised almost $20 billion from venture capitalists and strategic investors. Its most recent funding round valued the company at $157 billion. As a privately held company, OpenAI does not publish its financial statements to the public. But recently, some of its financial documents were leaked to the media. This gives us some idea of how the company is doing. According to the leaked documents, ChatGPT had 350 million users worldwide as of June 2024. The vast majority of users don't pay anything. With the free version of ChatGPT, you can only give it a limited number of prompts per day, and you may not be able to use it at all during times of high traffic. You can pay $20 per month for ChatGPT Plus, which gives you priority access and much higher usage limits. Approximately 10 million people subscribe to ChatGPT Plus. Thus, as of June of 2024, ChatGPT was generating approximately $200 million of monthly revenue. In addition to their consumer offering, OpenAI also offers more customized chatbots for enterprise customers. OpenAI's enterprise offering offers enhanced security and privacy. Data entered into the enterprise solution is not used to train OpenAI's models, ensuring that sensitive corporate information remains protected. It also offers greater customization and can be integrated with the company's existing software and internal databases. For example, a logistics analyst can ask ChatGPT about inventory levels of certain products. ChatGPT Enterprise can access the company's inventory database to provide an answer. Currently, about 75% of OpenAI's revenue comes from its consumer offering, with the remaining 25% coming from its enterprise offering. As of June of 2024, the company was making a little under $300 million of monthly revenue, but their number of paid subscribers is steadily increasing. The company expects that for the full year of 2024, they will generate $3.7 billion of revenue. Despite the growing revenue, OpenAI expects to burn $5 billion of negative operating cash flow this year. This does not even include stock-based compensation for its employees, which is also very significant. The main reason OpenAI is losing money is its massive data center costs. Every time someone submits a query on ChatGPT, this requires significant computational power. There are approximately 340 million people who use ChatGPT each month without paying for a premium subscription. These users incur significant costs to OpenAI without generating any revenue. AI computing hardware is becoming more advanced every year. This makes it cheaper to run any given AI model. But to keep up with the competition, OpenAI is constantly making larger AI models that require more computing power. The increasing efficiency of the hardware is offset by the increasing demand from the software. Today, AI models are constrained by computing power. Thus, we can expect data center costs to be very significant for the foreseeable future. It's unclear if OpenAI even makes money on its premium subscribers. ChatGPT Plus has very high usage limits. The type of people who are willing to pay for it are power users. Recently leaked documents reveal that OpenAI plans to more than double the cost of ChatGPT Plus over the next 5 years to $44 per month. OpenAI is the largest and most established AI startup by far. It's safe to assume that almost all of the hundreds of smaller AI startups are also losing money. Venture capitalists are willing to fund these losses in the hopes that AI will eventually achieve widespread adoption and create a massive revenue opportunity. If it would cost $44 per month for ChatGPT to become profitable, the question is, how many consumers would be willing to pay such a hefty price? Keep in mind that at the current price of $20, only 3% of users pay for a Plus subscription. While the capabilities of ChatGPT are impressive and can make for a good party trick, there really aren't that many compelling use cases in everyday life. For most consumers, tools like Google are not only free, but also reliable enough to answer most questions. While chatbots can potentially save time by providing quick, synthesized responses to complex queries, their tendency to hallucinate, producing incorrect or fabricated information, undermines trust in their output. Users are forced to double-check the chatbot's answers using traditional search engines, negating much of the time savings these tools promise. Businesses face even greater risks, as the consequences of an AI producing incorrect information can be severe, including reputational damage, legal liability, or financial loss. For companies, these risks often outweigh the potential productivity benefits. Companies like Meta have spent billions of dollars developing AI models, which they've integrated into Instagram, Facebook, and WhatsApp. These AI tools are free for consumers to use. The hope is that they'll increase user engagement, thereby increasing ad revenue. For example, on Instagram, you can make a fake AI astronomer you can talk to. While this could be a cool party trick, it's doubtful that many people will use this tool regularly. While we've spent most of this video talking about AI chatbots like ChatGPT, generative AI can also be used to create images or even videos. Using AI to generate video is computationally intensive, incurring massive data center costs. The idea is for companies to eventually use AI to make television commercials and possibly even Hollywood productions. We're already starting to see this happen. Recently, Coca-Cola released a holiday advertising campaign featuring commercials made completely with AI. Consumers were not fooled. Just by watching it, you can instantly see that it's fake. The consumer reaction was extremely negative. Coke posted the commercial on its YouTube channel, so you can see the comments. They are overwhelmingly negative, calling the commercial soulless. Consumers criticized Coca-Cola for being greedy by replacing human animators with AI slop. At the end of the day, the massive investment surge is being powered by venture capitalists, not end consumers. Take the example of OpenAI. In 2024, they're on track to incur $8.7 billion of cash operating costs, while only generating $3.7 billion of revenue. In other words, approximately 60% of its operating costs are being paid for by venture capital. For smaller AI startups with less revenue, the ratio is even worse. In the long run, this is not sustainable, as eventually the venture capitalists will run out of money. The tens of billions of dollars being spent on Nvidia's AI hardware ultimately needs to be paid for by the end consumers of AI products. If consumer adoption fails to materialize at a sufficient level, the current investment boom in AI hardware will come crashing down. In its most recent funding round, OpenAI was valued at $157 billion. To understand whether or not this is reasonable, let's consider how big the company would need to get to grow into this valuation. Assuming a 20 times earnings multiple, OpenAI would need to eventually generate about $8 billion of annual net income. Assuming a 21% tax rate, they would need about $10 billion of operating profit to justify their current valuation. The company currently loses money by charging $20 per month for ChatGPT+. For the sake of argument, let's just assume the computing costs are $20 per month for each Plus user. They eventually plan to increase the price to $44 per month. So they'll make a gross profit of $24 per user per month, or $288 per user per year. To get $10 billion of gross profit, they would need approximately 35 million plus subscribers each paying $44 per month. And that doesn't even account for corporate overhead. So can ChatGPT ever achieve 35 million users paying $44 per month each? Currently, they only have 10 million people paying $20 per month. To get a massive increase in the number of paying subscribers while also more than doubling the price, they will need to greatly increase the capabilities of the product. This likely entails training larger AI models, which will require more computing power and thus greater data center costs. This makes the path to profitability highly uncertain. If we look at Nvidia, its valuation is even harder to justify. As of the time of recording this video, its market cap is approximately $3.5 trillion, making it the most valuable company in the world. To achieve a reasonable valuation of 20 times earnings, they need their annual net income to grow to $175 billion. In the trailing 12-month period, they generated $113 billion of revenue and $63 billion of net income. Thus, their net income was 56% of revenue. If we assume that the net margin remains constant, Nvidia needs a little over $300 billion of annual revenue to grow into its current valuation. In other words, to justify its current valuation, Nvidia needs the cloud service providers and other AI data center operators to spend $300 billion per year on GPUs every single year for the indefinite future. In my opinion, this level of spending is extremely unlikely to happen, at least not for a sustained period of time. For this to be sustainable, everybody in the value chain needs to be profitable. The cloud service providers have other costs besides just buying the GPUs, and they must make a profit for themselves. So for them to pay $300 billion per year for new Nvidia GPUs, they must generate more than $300 billion of revenue. For the sake of argument, they would need to generate $400 billion of annual revenue for this to be sustainable. Similarly, the AI software companies have other costs in addition to what they pay the cloud service providers. They need to pay their research engineers, corporate overhead, etc. For them to sustainably pay $400 billion per year to the cloud service providers, they need to generate, let's say, $500 billion from end consumers. This is a huge number. Remember that OpenAI, which is the largest AI startup by far, is only on track to generate $3.7 billion of revenue this year. Nvidia's revenue has indeed increased substantially over the past 2 years. Bullish analysts extrapolate this meteoric growth into the future to justify their high price targets. But this level of revenue is almost certainly not sustainable. When ChatGPT was first released, the cloud service providers could immediately predict that this would catalyze a massive increase in demand for AI computing. This motivated them to buy tens of billions of dollars worth of Nvidia GPUs to meet the expected demand. These are one-time capital expenditures that are not recurring in nature. Once you buy a GPU, it lasts for many years. Even if end demand for AI applications remains at a constant level, demand for new GPUs will decrease once the cloud service providers have enough of them. The release of ChatGPT caused a step function change in demand for AI computing power. This created extraordinary demand for Nvidia's GPUs. Many investors extrapolate this extraordinary demand as if it is a new normal. This has caused Nvidia's market capitalization to balloon to an absurd level. Alright guys, that wraps it up for this video. What do you think about AI? Let us know in the comments section below. As always, thank you so much for watching and we'll see you in the next one. Wall Street Millennial, signing out.